Good morning. Welcome to StockMarketFunding.com. What I have here is the S&P 500 index. I'm going to be talking a bit about what stimulants have done, what high deficits are, and the tax cuts that would come off that will destroy America, the FinReg bill. What are all the reasons why the S&P could go to 600 in 2011, and why all of this stimulant that happened here is that breach of going lower, and the reasons why. These stimulants over here back in 96, they worked up until the 2000 top. Then we had another round of stimulants that came in over here at 2007 that worked for almost 4 years. But we went way back down here to the 1997 breakout level on the S&P. Meaning that the stimulants that happened in round 1 with your government, the stimulants in round 2 with your government that failed. And StockMarketFunding.com, if you want to go into our blogs, go back to 2008, look at all our blogs in 2008. We made this big move and called this big move down. We also called the S&P reversal here on April 24th. We have the live trades. We have the live videos during live market hours to prove our accuracy. And like I said, the world is living in a very dysfunctional thinking pattern right about now. Now, why can the S&P come down here to 600? Well, let's talk about that stimulant. But then again, remember that part of the stimulant here is when those tax cuts were taken off out to 2011, that provided, along with other stimulant plans, it provided a great move. There was about a 15-year period where America had the best years of its economic prosperity that are at jeopardy. The reason why they're at jeopardy, folks, look it. Before I go into that, I want you to know that at StockMarketFunding.com, with our 30 years of experience, and you know, we have a school, we have a professional trading division, we have a school division, we have so many things at StockMarketFunding.com that you don't know about that you could use to position yourself for the forward-looking events instead of being a victim. And that I will, you know, point it all out. I always have. I've got all the live trades to prove it. I've got all the live trading videos. Go look when we call the top here, telling people to sell into it. But more importantly is, why could it go to 600? Well, 600 is right here on the S&P. That's the last low. Your stimulants have worked for the 3rd time. Here was a round of stimulants. But remember, during all these other times, is that the tax side of the economy was set right for expansion. This government, when they take off the taxes, what led America into prosperity will lead America into destruction. I will make a lot of money. Now, why would we make a lot of money? Well, because the farther it falls, the more money that you make. There are 3X bear funds that we specialize in ETFs, and 150 different style of risk management financial tools that we can use and end up coming out way ahead. That's how we always survive. When we went long down here when no one wanted to be, the earnings are good. We're in the earnings season. We're selling short everything. Intel, Google's come out, Apple's going to be coming out the next couple of weeks. We're telling people that the July earnings season is going to be good, but guess what? That they're going to sell into it. On this monthly chart on the S&P, what's going to happen is that the 10-month, we got above this long ascending 10-month moving average within this very trend cycle. Oh, how nice that was. But look what's happening on the 10-month moving average now. It's flat. When this here ascended is where we made the bigger gain on the S&P to that top reversal that we called for. Now, we do not have a monthly buy signal on the MACD, and that is going to be overhang. That monthly MACD is getting ready to roll over, called moving average convergence divergence. It's a lagging indicator, but they work fine enough. That crossover, this blue line is called a percent DS, I mean the green line. So when it was rising, everything else was rising. When that falling 10-month moving average finally flattened out here, we got good support under the S&P. Now the S&P 10-month moving average is flattening out. I will guarantee you, when it starts to tilt on the monthly moving average on the S&P and it starts to descend, this is the kind of wreckage that you will see. So basically, the bullish aspect in the short term, as far as a monthly chart goes, is the 20-month moving average supported it. We went long right here, and we sold into the high at 1100.